We all buy home or car on loan for a better growth and happiness in life, right? But is it wrong to buy them on loan? Not always. If you have a good stable monthly income and your loan EMIs are within your comfortable paying capacity, then it is manageable. In a similar way, promoters of most of the companies try to borrow money for the business expansion. Sometimes they may need to pledge their own shares as collateral to get loans against them, just like how our home is taken as collateral when we buy it on loan. But promoter pledging of shares is quite common, and in fact, most of the companies listed in Indian stock markets have pledged some of their shares to get loans. But what happens when you take more and more loans? You will start struggling to pay your EMIs, and beyond a point, you give up. The home that you bought on loan may be put on auction by bank to sell it and recover the dues. In the same way, when the company goes through tough time, promoter may come under pressure and may struggle to pay back the loans. The pledged shares will be sold in the open market by the lender and the share price crashes. If you hold shares of such companies, how to exit them before the share price crashes? Continue watching to understand it better. Welcome to Save and Invest Smartly. We have already seen in our previous video how to check the promoter holding of a stock. If you have missed watching that video, you may watch it by clicking here. If you want to learn about stock market investing in an easy way and build your wealth to become rich, consider subscribing to Save and Invest Smartly channel. I'll be posting regular investment and personal finance videos which will help you a lot in achieving your dream, the financial freedom. What is promoter pledged shares? When a promoter needs money to expand the operations of his company, they may pledge their shares with the lender to raise funds. It means that these shares are offered as collateral to banks or lending institutions in exchange for loans. This is similar to how you keep gold as collateral to get gold loans or keep home as collateral to take home loan. Generally, the lender asks for collateral shares worth 2 to 3 times the loan amount. If the promoter wants to borrow, say, 100 crores, then he may be asked to give up to 300 crores worth of shares as collateral. Whenever the share price goes down, the collateral margin will come down. In this case, the lender may ask for more collateral or repay the loan partially to maintain the collateral margin ratio. So promoter submits more shares if he is not in a position to repay the loan partially. If the stock price further goes down, promoter will be asked for more collateral. If the promoter has pledged already 100% of his holdings, then he may not be able to give any more shares as collateral. In this case, the lender will sell some of the collateral shares in open market to recover the dues. When the lender sells the shares in the open market, there's a huge demand and supply gap. That is, there are huge amount of shares sold by lender, but the buyers may not be that many. Hence, the shares are sold at lower price, and this triggers a stock price crash. Hence, to exit from a stock before it crashes, it is very important to track the promoter pledged percentage of the stocks that you hold. In this video, I'll show you how to use Trendline to check the pledged shares information. Most of the features in this website are free and sufficient for beginner investors for their stock analysis. Go to trendline.com. You may sign in using your Google credentials. Once you log in, on the right top corner, you will see a search box. You may key in the name of the stock that you want to analyze here. Let me take TCS for example. Type TCS in the search box. From the search results, pick up the right one that we want. This will take you to the overview page of the stock. Now click on the sub-menu Shareholding. Scroll down a little to check the latest shareholding information. The promoter holding is 72% in TCS, which is very good. On the right side, you will see the promoter holding information for the last 9 quarters. Along with the blue bars, do you see a small orange bar? That shows the percentage of promoter pledged shares, which is around 3%. This is very less number for a fundamentally strong company like TCS. As I said, pledging of shares is common and there is nothing wrong in it as the promoter does that for expanding the business. It becomes a concern only when it increases beyond unmanageable limit. But what is that limit? Generally, if the promoter pledged percentage is greater than 50%, then it is a bad sign. In that case, we should do a thorough research before investing in that stock. Let us pull out the list of all stocks that have a promoter pledged percentage greater than 50%. For this, you need to use the screener. In the menu bar, click on Screeners. Scroll down a little and you will see a button, Create New Screener. Click on this. This will open up the query window where you can write the query for screening the stocks as per your criteria. We would like to get the list of all stocks that have promoter pledged percentage more than 50%. Let's write the criteria for that. Just type in the word promoter. As you type in, you will see all relevant options that you can use. Select the option promoter holding pledge percentage. Let's give the condition as greater than 50. Click on Try this query to execute this query. This will bring the list of all stocks that have promoter holding greater than 50%. Let me sort as per the market capitalization to show the stocks with highest market cap on top. Let's check the shareholding pattern of Adani Ports. You can see that promoter shareholding is 62%, but as per the latest quarter, 58% of that holding is pledged. Also, the promoter pledge percentage has been increasing in the recent quarters, which is again a bad sign. On the bottom, you will also see that FII are reducing their stake in the recent quarters, which shows FIIs are losing confidence on the stock. Hence, you should do a thorough research before you invest in these kinds of stocks. This will help you to avoid a stock or exit the stock before it crashes. In case if you observe that a company is reducing its promoter pledge percentage, it could be a recovery signal. Before we pull the list of such stocks, if you like this video, please hit on the like button. That will motivate me a lot. Also, subscribe and hit the bell icon so that you don't miss my weekly videos on stock market investing and personal finance. Let us now pull out the list of stocks where promoter pledge percentage reduced by 25% or more in last quarter. Give the condition as promoter pledge change quarter on quarter percentage less than minus 25. Click on Try this query to execute. This brings up a list of 19 stocks. Let me sort by market cap to have the bigger companies first. Now let us check Apollo Hospitals. The promoter holding is 30%, and you can see on the right that in recent quarters, the promoter pledge percentage is decreasing. This is a good sign for a company, and you may research further to invest in it. Hope this information on promoter holdings and promoter pledge information was useful to you. Please subscribe for more such useful videos. I will come up with yet another great video for you to build wealth and achieve financial freedom. Thank you, friends.